And from a market perspective on Adani, but also in general and where to find value in equities, I'm joined by Chad Slater, the co-investment manager at Morphic Funds Management. Chad, good to see you.
Good afternoon, Helen.
Now, should taxpayers be stumping up some money, in your view, for Adani? Everyone seems to have an opinion on this.
Well, Helen, as you're probably aware, we run an ethical fund. So clearly we have a fairly strong view here, which is against coal. We think there's better options rather than coal out there to use. But leaving that to one side, putting my taxpayers hat on, no, I don't think taxpayers should be funding for this. There are certain cases where the government should assist businesses, often in startups, etc., creative side of things. But funding a large, well-funded business itself, personally, it's not something I think that we should be funding.
Yeah, so do you think, and have you read enough, that there is a strong business case for it without a great deal of taxpayer support, both for the rail line through a loan from the Northern Infrastructure Facility and also this holiday, this so-called holiday on royalties by the state government?
Oh, look, I was going to say, let's be clear, I'm not an expert in this area. But having said that, look, the idea of funding, or from what I read, to do with the royalties, it was more to do with rearranging the order in which the royalties were paid. That's fine, but writing blank cheques for, if an asset can't stand on its own two legs and justify its investment case, whether it be auto manufacturing in Australia or not, I'm a bit sceptical that government assistance can assist anyone other than external shareholders.
All right, let's move on. I want to ask you about the Trump budget. It was the first budget from the new president. What did you make of it, and what conclusion are markets really coming to about it?
I didn't realise the president was still doing budgets. It would appear to be that markets, I think, have come to accept that a lot of the Trump euphoria and what we thought could get done, what markets had hoped could get done by having a unified Senate and Republican House and President, are not going to happen. This budget's just far too divisive for that to happen.
Yeah, so what do you think are the markets moving to the idea that the Trump trade has kind of finished, or that in fact, even if it's delayed a bit, some of the tax cuts that he promised, and certainly the infrastructure spend that was promised, will actually get done, even if it's delayed?
Look, there's a number of sort of types of stocks which a couple of our prime brokers put together, which say you're a US domiciled stock that paid a very high tax rate. So, for example, you would have been a prime beneficiary, that stock would have, of the Trump tax cuts. So you can measure how these things have performed after the election and recently as a proxy for Trump euphoria. And what it looks like is it's all gone from the price now. These stocks are back to where they were pre-Trump. So using that as the proxy, the markets have given up on those sort of tax cuts. They've also given up, I think, on infrastructure spend for the moment. If you look at a few of the materials companies, etc. So rightly or wrongly, markets don't think he's getting anything through at the moment.
Yeah, all right. Let's move on and talk about where you are finding value.
Yeah, so Helen, we, as you know, we're a global house. I'd say we're finding value anywhere but the US on average. The US is a pretty expensive market. The Federal Reserve's going to be hiking rates at least twice more this year after once already. So into a rising rate backdrop and expensive PEs, we don't think is particularly attractive. On the other hand, we see places like Europe has done well this year, and we've moved on from that. But Japan in particular, we think is our current area of focus. We're finding a number of stocks there. And generally, we think people have tended to forget about Japan.
All right. Chad Slater from Morphic Asset Management, thank you very much for joining us. Talk to you soon.
Cheers. Thanks, Helen.